U.S. pauses escalation in tariff war with China, but businesses remain in limbo. After weeks of intensifying trade tensions, the United States has unexpectedly stepped back from escalating its tariff war with China. On Friday, the White House announced it would not raise tariffs on Chinese goods beyond the current 145%, despite Beijing's plan to increase its own tariffs on American imports to 125% starting Saturday. While this sudden pause may signal a potential opening for renewed dialogue between the two superpowers, experts warn that the economic uncertainty caused by this tit-for-tat exchange is already doing lasting damage to businesses on both sides of the Pacific. A trade war on ice not over, the latest developments come amid a broader climate of economic brinkmanship. U.S. President Donald Trump has signaled he's open to a deal with Chinese President Xi Jinping, raising the possibility of fresh negotiations. But questions remain over which leader will take the first step toward de-escalation. "I think Trump will probably pick up the phone first," said Taibar Bashadesh, professor of economics at the Georgia Institute of Technology. "He can present it as being a great deal maker. Xi Jinping, I believe, would answer that call. Good news for economic markets and small businesses alike." Still, Bashadesh cautioned that China, though more dependent on exports to the U.S., is politically more insulated from the fallout. "Chinese policymakers don't have to answer to voters," he explained. "That gives Beijing more staying power in the face of economic pain, while Trump faces pressure from media, markets, and the electorate." The long shadow of uncertainty. Even if a deal is eventually struck, the repercussions of this standoff may linger for years. Businesses rely on predictability to plan investment and hiring decisions, and the volatility of U.S.-China trade relations is creating deep unease. "This trade war has opened up a Pandora's box of uncertainty," Bashadesh added. "Even this current pause is only for 90 days. There's no way to plan for the long term with such unpredictability." That sentiment is echoed by Glenn Tifford, co-chair of the U.S., China, and the World Program at Stanford University's Hoover Institution. "The danger isn't just economic," he said. "This is part of a much larger geostrategic confrontation, especially with Taiwan looming in the background. These tariffs are a preview of market disruptions that could come with greater conflict." China's broader strategy. While the White House waits for a phone call that may not come, China is pursuing parallel strategies to insulate itself. Xi has been stockpiling critical commodities and deepening trade ties with other regions. China's Belt and Road Initiative, as well as its recent outreach to the European Union, may help it weather the storm. This randomness coming out of Washington only strengthens China's influence in Southeast Asia, Africa, and potentially Europe, Bashadesh said. Xi has already proposed deeper cooperation with the EU. Spanish Prime Minister Pedro Sanchez was recently in Beijing for talks on trade and investment, highlighting a potential pivot by Europe toward China. Risks for Europe and the global economy. But not everyone believes a China-EU alliance would be wise. Tifford warns that such a move could split the West and weaken democratic alliances. "Nothing would please China and Russia more than seeing the US and Europe divided," he said. "We must resist that temptation. We are stronger together." Bruce Stokes of the German Marshall Fund shared a similar view. He acknowledged that while European nations may be lured by Chinese investment, especially in electric vehicles, the EU and US share a common challenge: China's state subsidies and growing dominance in industries from EVs to commercial aviation. What comes next? Despite the White House's decision to pause tariff hikes, there's no indication of a lasting solution. Stokes predicts that American consumers may begin to feel the pinch soon, with inflation creeping up, and domestic businesses potentially hiking prices alongside imported goods. "This war won't just hit trade, it's going to affect everyday life," he said. And while the Chinese will suffer in the short term, they're already finding ways to reroute exports to Europe and Southeast Asia. The tariff freeze may provide breathing room, but both sides remain far apart. As Xi invokes Mao-era slogans about survival and Trump touts his hardline stance as leverage, the business world is left navigating a chilling climate of doubt. Whether a full trade agreement or even a temporary truce can be reached remains uncertain. What is clear, however, is that this economic Cold War is far from over.